your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, first of all, folks, I've posted a chart here of Apple, and would you please stop sending gifts? It's nice to get chocolates and, cases of champagne and fresh fruit and stuff, but enough is enough. I know I recommended, to go long heavily right before the close yesterday. Those of you that got that special memo, and if you believe that, I still have 2 shares of the Brooklyn Bridge. Folks, the only thing that you have going here is you have a very oversold market, and it closed higher the day before. That's about the only thing you have. If you're going to do anything with that, I would say you'd have to buy a call. And if you did, you made big bucks. But that's basically it. What has happened is we have come up and we made a 61% retracement in one day of the move that happened from back December. We did that, there's a couple days into it, but this day is most of it right here. And that number comes in at 186.31, and the high today was, it missed it by quite a bit. 186.31 was the number, and it got to 187. Well, it missed it by how much? 17 cents? That's not too bad. Okay, now let's, folks, there are so many things that I see technically on not all the financial charts. I mean, it's just really, truly amazing what we're seeing here today, and it's going to be apparent here Monday or Tuesday when we come in here to see what's going on. We have completed all of the ABCD patterns that we were watching, except let's just do the one for the NASDAQ. I wanted to bring out here, show it to you again here. This is the NASDAQ, and you can see it's made to multiple ABCD patterns. There's a 1-3 drive to a top pattern, setting just about exactly at the 61% retracement of the high that we made back on March 16th. So this is really interesting how it's going to end up on Friday. Now, today's Friday in an up week, and we still have that target outstanding in the S&P that comes in. Hold on, let me get this up here. I want to get this separate. One other thing. In the S&P that comes in at 51.85. So far, the high has been 51.66. I think we could probably get that 51.85. It's a Friday in an up week. You're going to have a hard time getting anybody to sell it unless there's some type of a, flat out big reversal. Now, I posted the chart that comes from our friend Nor Basil, who was Nor Basil. That's a pseudonym, folks, by the way. His name is a lot easier than that. Anyway, what he was looking for was a top sometime in March of 2024. I still believe that is the case. I mean, he said it should be, the equinox was on the 21st, 22nd, so that's in March, and that's pretty much, remember, this thing goes back for 50 years. It goes all the way back to 1972, the work that he does here. Anyway, let's move on here and cover a couple other things. Jeff Huge will be our guest here at the break. Now, I've got a few other charts to cover here as usual. Hold on here a second here. There is the E-mini. We've already covered that one. Where is the shut the front door and razor? Let's do the E-mini. Let's do the S&P, because this is the one that still has this outstanding target. Now, you'll notice here, this is the target that we're looking for. Now, we've made this target in the cash market. In other words, today's high in the cash was right here. So that's why this is really interesting to me. Now, we've had these explosive moves in here. I mean, my goodness, yesterday you had these higher bottoms in here. We've been waiting for this for a long time, so it's going to be interesting. But the fact that we made this in the cash already, I think is very important. So what I'm going to be watching here, this is for kicks and giggles, all right? Here is the big move. We came down just a little bit. We're just going to see why we stopped right there. there's not really much you can measure off of it because it's such a straight up move, but let's just give it little kicks and giggles here from your low up to your high right here. Your 382 retracement comes in here at 51.16. Now, if we get below 51.16 on the close, that means that everybody bought it this morning is going to have a loss, much like what happened to Microsoft not too long ago. So that's what I'll be watching. I just think we got a chance to make that number up here at 51.85. I really believe that we do have a chance to make that. So I would be waiting for that. If we have anything else to do here. Here is a very, very interesting one on that same tone. Don't trade it, but do watch it. And this is a heck of a move, folks. Look at this. This is the daily chart of the Russell, and look where we went to. We went to the high of April 1st today, the exact 61% retracement, right on the money, and we've already sold off 25 handles. That certainly must mean something. Now, we did have a potential for an AB swing up in here. And you see that would have measured to 2089, 19 points higher. But remember what Mr. Albert Einstein said, mathematics precedes geometry. Numbers are mathematics. And Sarah, can you get that? I don't know what's going on here. Sorry, folks. I'm traveling, so bear. Just a sec. Please come back another time. The door's knocking at the door here. Sorry. I happen to be playing in a. Okay. Sorry, folks. Hold on a second here. All right. Let's. This is the Russell. That's the number 2 most popular of all the stock indices. Let's look at this intraday here, and let's see. You'll see the spike up. Wow! Look at that, folks. Everybody that bought that spike up in here now has a loss, okay? Now, if I were watching this on a little kicks and giggles, you'll notice here from the high, you want to watch for that first 382 retracement, and it's almost there right now. That's at 2050, so watch the Russell at 2050. Could be very, very interesting today. Hold on. I'm a little tiny bit dehydrated. Hold on here. Let me get on here. By the way, the grain markets have exploded to the upside, and they're just beginning to get started doing that. So stay with us here. We're going to take a quick look here at the gold market. Having some nice action today in gold. Now, this is just a short-term move. You'll see here we made lower lows here. You can see the ABCD here. It's a little late to show it to you because it's already happened, but that's it. There's your A leg right here. There's your B leg. There's your C leg. Let's see how close it was to the good old ABCD. There's your AB. There's your CD. Let's see, it comes in at 22.85, and it's had a pretty good rally from that level. Now, that's just over the last couple of days, but that's how you start to look at these things. It gives you an idea of where these ABCD patterns come from. If you look at this, of course, on a half-hour chart, hold on one second here, good old half hour. We'll be right back in just a moment, folks.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we've got Mike from Niagara Falls on the line, and we're taking a look at copper here. You can notice here for the last 3 days, we've had a pretty significant down move. What's your question, Mike?
Yeah, hi, who do you like in tomorrow's Derby? The purse is $5 million.
Well, I like the horse number 17 and the horse number 15 are my 2 picks, but I don't know which one's going to win, so I'll probably bet
catalytic? So you put your life savings into catalytic?
I look at the jockeys. I don't really care about the horses. If it's a good jockey riding a horse in the Derby, he's put on by his agent who picks the selections. And if it's a good jockey, then that's it. So I'm looking for good jockeys that are going to be a good price. Number 1 is going to be a big price. Number 12 is going to be a big price. A lot of them are because there's only 2 favorites. But number 17, just because it's never come out of that hole, you got to bet $10 to win. I mean, 2,200 horses in 150 years and it's never had a winner. So that's what I'm basing it on. But, you know, Mike, remember the last time I had a winner in the Derby was Ferdinand in 1987. I've actually had a few in between, but it's really hard to pick 20 horses.
So when is Stan Harley coming on?
Stan is going to be in next week. He had a very dear friend pass away, and he had to go down into the deep south to go to the services and stuff. So around Wednesday, Thursday next week, he should be coming on. And Norm Winsky will be our guest on Monday. And today we have Jeff Huge.
Okay. All right. Thank you very much.
Okay, you bet. Okay, since we're looking at copper here, let's just take a quick look and go down to a smaller time frame. Let's just get down to a half-hour chart. And we'll see what's happened to it. Now, you see we had this was the top right up in here. And if you took a look at it, you'll see that the big 382 retracement came right here. And then we came down and made a newer low. So guess what, boys and girls? that means that we have a new 382. And how do you do with 382? There she is, setting there in its own beautiful color at 455. If you like 382, it's the thing to do. And that's what I will be looking at, because you're risking about 2 cents on this. And if it's right, it could be a dandy. And if it's wrong, you're going to lose about $500. Just remember that. There's no free lunch. Okay, now let's move on to a couple other things that are relatively important. Hold on one second. I want to get the just a minute. Someone's asking a question about Microsoft. Just 1 second here, and I'll get this up here if I can. I'm not too much of I zero stock stuff, but that's neither here nor there. Okay, remember Microsoft has had a situation, and they had some really bullish news, I guess. All right. Here's where we are. Let's look at Microsoft first on the daily, because something really big happened to Microsoft, okay? You remember for the whole month of February, everybody that bought that stock is just about even now. You see, they were losing for a while. Now they're just about even. Now, you'll notice here that we didn't make a lower low here. So we've had a move here, and it's just going sideways, really. This is not what I think is really bullish action. Okay, so I'd be really skeptical. Now, it would have been nice if this would have been a little bit lower. That would have told you the 382s right here. So let's go down to an hourly chart, and let's see how clear we can make this. And there it is right there. There's our high that we made just yesterday. And, that was made on the 26th. All we're doing, folks, this is not a bullish pattern in Microsoft. This is just a rally coming back in a bear market, and you're setting right at the 50% level. And that's also, it looks like a pretty significant, AB equals CD. So I can't get bullish on some of these stocks, even though they're crazy. I mean, the Dow Jones was up 500 points today. And since we're talking about the Dow Jones, let's get up here and take a quick look at it, because we've only got a few more minutes before Jeff comes on the line here. Here's where we are. And if we look at this on the daily, okay, now this is the daily Dow Jones. See, that should have made that target up here. You made it in the you made it in the cash S&P, you made it in the Nasdaq, you made it in the Russell, but you didn't make it into Dow Jones, and you missed it so far in the S&P. So 2 out of 4 may or may not be telling you something, but this is definitely a 10-day rally. Okay, now let's go down to a little bit smaller time. I'm not short in this stuff, folks. I am not. I'm waiting to see where the close comes in. It'll give you plenty of chances. They always give you plenty of chances to sell it, because you see, we've taken out the highs of last week. All right, now the Nasdaq completed the number. We didn't do it. We're just making 50% retracement. The Nasdaq was doing pretty much the same thing. Let's get that up here to see what that number was in the Nasdaq, and you'll see, I believe it was just about exactly 61% retracement. So far, the high of the day has been 180.50, and this number should have been 180.74 to 180.90. Boy, that's awfully close, folks. So this is a really important high. That's why you hear a little of excitement in my voice. Of course, at my age, just being able to look at the machine is exciting. So keep that in mind also. Hold on 1 second, please. Folks, you got to remember that Sunday in Arizona is like a national holiday. It's Cinco de Mayo, and everybody is Mexican on that day. It's really an incredible experience to live here in Tucson, because of all the parties that they have, and it's really they clamp down on the drinking and driving. Boy, Uber's going to be super busy, because the state troopers here, they don't tolerate any of that stuff. One glass of wine, and they'll put you in a hoosegow. Okay, let's move on here to someone's asking a question about cocoa. And believe me, folks, I know about as much about cocoa as I do most of these other things. So let's get this up here and take a look. It made some type of a high, I believe. Let's get this. Went to $10,000, folks. That's like beans going to $45. Oh, it's made a big correction here now. Yeah, see, we got up there. There was your, wow, look at that. Wonder what that pattern is. A, B, C, D. And 11675, and the high was 11722. Not too bad. Then we broke down pretty good here. You can see here we have a rally back. This is one of the things we like to watch for. There's your rally back. Let's just see what it is going to be. And if it's going to be what we think it's going to be, and it is. It is none other than the old mystical trade itself, Mr. 382. Our guest on Monday will be Norm Winsky, folks. It's going to be all of the shows are important, of course, but Norm's got some incredibly interesting things to share with us. And a lot of stuff happening, in the markets. Boy, just numbers everywhere. So you got to be prepared. So let's keep a very, very close eye on that. Let's see how the old clock on the wall is coming here right now. And we'll be looking. We've got 50 seconds left. Boy, that's a lot. Just remember this chart right here, folks. This will be included in the newsletter. It comes from Alan Smith over in the UK, and you'll notice you can see the beautiful 3-drive pattern right here, and coming off of this high right here, it's exactly 61%. You can see it right on the money there. So let's keep a close eye on these interesting times. We'll be right back with Jeff Huge of Alpha Insights.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, we're back, folks. Jeff Hughes of Alpha Insights is in the house. How are you doing, my friend?
I'm doing great, Larry. Thanks for having me on the show today.
It's a pleasure, my friend. We're looking at long-term cycles pointing down. Boy, I'll tell you, volatility's pointing up, that's for sure.
It is. And, before I jump into this, I just want to say why I'm looking at cycles. There's really 7 things that I look at in no particular order. But when they're all in alignment, you want to pay attention. And it's cycles, breadth, momentum, sentiment, positioning, trend, and pattern. And we've basically got everything in alignment right now. And what I'm looking at here in this particular chart is a very long-term cycle. This is 120 years of detrended data, price data for the Dow Jones Transportation Index. And what we see is on a quarterly basis, there is a clear cycle that can be discerned from this information over a long period of time. And that cycle peaked last year, 2 years ago in 2022, and it's been moving down steadily. Now, we had a kickback rally in 2023 in the data, in the momentum of basically the economic cycle, but it has turned down again, and we think that it is going to continue down. And it doesn't necessarily mean that we're looking at a crash or something in the economy. It doesn't rule it out either, but basically telling us that the wind is in our face rather than in our sail. And it's going to be very, very difficult for probably the next decade or more.
Wow. You're tidings of good news coming our way, I guess. Market breadth, boy, there's something that really looks weak. My goodness.
The Russell 2000 doesn't get enough credit. It's actually the broadest U.S. index in terms of the number of stocks. There's 2,000 constituents, actually a little less than that. There's always a few rolling in and out, but roughly 2,000. And, another measure that we look at pretty regularly is the value line composite, which is 1,700 stocks. But both of these look almost identical. What we're looking at is basically a trend that went down into the October 2022 low and is basically flatlined since. We've had about a 50 to 61% retracement of the initial decline, and we have broken down from that. In fact, even with today's big rally in the Russell up over 2%, we're still below the 50% retracement of the decline off of that January, or I should say November 2021 high into the October 2022 low. So this to us looks like a corrective waveform that is probably topped, and we're in the early innings of the next phase of decline.
Wow. Okay, the next one is a momentum going back many, many months. You're going back here 25 years. My goodness, that's all. Tell us what you're looking at. This is very wow.
Whenever we're looking at momentum, we can look at it at various degrees of trend. Periodicities of say 1 year or 3 year, 5 year. We can look at it on a daily, weekly, or monthly basis. The most important is the most durable, and monthly is the most durable measure of momentum. And if you take a look at this chart going all the way back to 2000, every time the stock market has peaked, momentum has peaked at lower highs, giving you kind of a tell before the major decline. We saw it in 2000. We saw it in 2007. We saw it again in 2018 and 2020 before the COVID collapse. The signals were there even before people knew it, had even heard of COVID. And again, we saw it going into the 2022 decline. But what we're seeing now is that the most recent recovery high in the S&P 500, we have not seen a confirming high in that long-term momentum measure. In fact, that is the largest monthly momentum divergence. We've dubbed it a mega monthly momentum divergence. The negative divergence here suggests that not only are we likely to see a significant downturn in the not too distant future, but the magnitude of that decline should be larger than what we've seen in the past, which suggests that this could be something of significant importance before it's over.
Okay, and the next one is on sentiment. I always like that. I don't quite understand it, but I can see it on the charts. So tell us what you're looking at here, Jeff.
Sentiment is really the attitude of all the participants. We like to look at all the different measures, but we've got two here in particular, which kind of juxtaposes professional investors against, basically individual investors, mom and pop, trading in their IRA accounts, if you will. And the top frame, what we can see is that, basically professional investors were very, very bulled up a month ago. In fact, on March 28th, we were levered at 103% equity exposure. That has come into about 62%. But as you can see, it's far from down into the underexposed levels of, say, sub 20%, where the market has historically bottomed. So we are far from pessimistic on a professional investment manager's perspective. If we go to the lower panel, it's about the same message. This is the bull-bear spread for the American Association of Individual Investors. And that, again, peaked in December of last year and then put in a lower high in March. It got as high as 32%, which is typically a very, very bullish or optimistic sort of sentiment measure for individual investors. It doesn't really get pessimistic until you get down to negative 25%. Well, we're still at 6%. We're still positive. And so, again, we are far from pessimistic at this point, which suggests to us that there's a lot more downside before the market really finds a durable bottom.
Wow. Okay, God, I love seeing these charts because I don't keep track of this kind of data, and it's extremely important. Oh, leverage. One of my favorite things. This is a beautiful chart. Where'd this come from? Oh, Investors' Perspectives. Go ahead.
This is published by a service called Advisor Perspectives. And what we're looking at here is the blue dotted line is the S&P 500 through the end of the first quarter. And what we're looking at here is the net credit balance of margin accounts. So now this is margin leverage minus cash, and it has never been more negative than it is today, negative $465.8 billion, except for late December of 2021, right before the market topped in January of 22, and then declined some 38% in the NASDAQ and 27% in the S&P. Well, here we are at higher highs in the price of the S&P, but a slightly lower high, but certainly an extreme high in that negative credit balance number. That's negative $465.8 billion. And so what it says basically is this: there's an extraordinary amount of leverage in the system, and if the market moves down, it's going to force margin calls. And as you know, Larry, margin clerks are the most tenacious breed on the planet. They're worse than the TSA at the airport. They take pride in selling you out.
They're the car dealers of the investment group. We'll be right back with Jeff Hughes, Alpha Insights, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, we're back speaking with Jeff Huge, Alpha Insights on stock market support and resistance. Please continue, Jeff.
Yeah, and before I jump into this, let me just finish my thought on that chart about margin leverage. You know, it really speaks to positioning, Larry. Everybody's all in. When you've got a negative credit balance of $465 billion, there's nobody left to buy, right? And so when we're looking at the stock market, we're seeing a rally here off of gap support into what I would describe as key resistance being the 50-day simple moving average here, which also happens to represent a 61.8% retracement both on the S&P 500 and the NASDAQ 100. These are the two key markets driving the world of equities these days. And we cannot get through that 618 retracement. We cannot get back through that 50-day moving average. And I think what we have here is a very simple ABC corrective waveform, a 3-point waveform that is peaking. And what we've indicated here is, again, trend and pattern are really important to our methodology. And here we can see that the trend has been broken. We broke the trend channel. We broke the 20-day moving average. We've broken the 50-day and can't get through it. And I think the next stop will be the 200-day moving average. The pattern that we see here, Larry, is a clear 5-wave decline underway. And we believe what's likely to occur is we'll see a breakdown probably between now and May 7th, which is another minor Montgomery cycle turn date. And that should drive stocks down to at least 48.50 or so, 48.20, which is the 38.2% retracement, and probably a slight bounce from there. And then we think we'll challenge the 200-day moving average, which comes in around 4,700 or so, right in line with the 50% retracement, a very, very important reference point for the market.
It's interesting you mentioned May 7th because that's a Monday. And so that'll be real interesting after being up for 10 days in this rally that we've seen going on. Let's move on to the next one here. This is gold, and to me, this certainly looks like it's going to have a little bit movement to the downside. What do you think here, longer term, shorter term?
Well, let me preface it by saying this. We just completed writing our newsletter for the month of May, which will go out tomorrow, Saturday morning, and it is an expose on gold. We are digging as deep as anyone has ever mined for gold or panned for gold, and we're explaining exactly what's going on in the market in the newsletter. And I think the way to play this, I'm taking your listeners behind the fold, behind the paywall, if you will. I think gold mining shares appear poised for a massive breakout, and I think we could see 50% returns before the end of 2024 with significantly higher or greater bullish potential longer term. We have targets for gold, the commodity, of 2,800 this year, but that's not as high as we can get. We think, we could potentially see the price of gold move as high as $8,000 long term. And if, in fact, we got to those levels, gold mining stocks, put it this way, it's like pouring buckets into thimbles, basically. Money's going to pour into gold mining stocks like no one's ever seen it happen before in the history of mankind.
Yeah, we're having $30, $40 swings all along, so it shakes out the little guys, and the guys have to stay with it with the conviction that's going to go a lot higher. That's basically what you have to do when you have volatile markets like this. And I know some people. You
have to take your gold and lock it in a safe and forget the combination for the next 20 years. And you'll thank me for it, because if you sell out your position because you get a 100-point move and you think it's a great trade, you're going to miss the real move. That's the crumb, not the cookie.
Jeff, I have some startling news for you here. 20 years is not in my game plan. I can see the 9th furlong pole right at the end of this room here. So anyway, it's been a wonderful.
It could be 10.
Yeah, right. And here come the Chance brothers. Anyway, I would like to say that it's been a heck of a run. I just can't ask for anything any better. Tell the folks about your monthly newsletter, Jeff.
Yeah, as I mentioned, we publish a monthly newsletter. It's called Huge Insights, The Big Picture, and we dig into a lot of big macro topics. This month it's going to be a deep dive on gold and all things central banking and money. But comes out the first Saturday of each month. That's tomorrow, usually around 6 in the morning. So if you're not already a subscriber, you can go to hugeinsights.substack.com and subscribe for free, and you'll get the first, 4 or 5 pages of the newsletter for free. And for those who want more, you can actually upgrade to paid and get a real deep dive into our complete market analysis, our positioning and conclusions and recommendations. And we think it's worth the money. It's a small price to pay, about $12.50 a month. Definitely give it a shot. We think you will definitely be rewarded in the long run for that.
My friend, thank you for being on. It's always a pleasure having you on. We'll have you on again in a couple of weeks. I love some of these charts. I especially like that one about the margin and stuff. It's just really, it's quite revealing. I've never seen figures that's so far out of whack, Jeff.
Yeah, it's rare, but when it happens, Larry, it means something. It means change is afoot.
And that has nothing to do with the crypto stuff. That's all basically stock-related people.
Yep.
Okay. Hey, thanks for joining us, Jeff. We certainly appreciate it, my friend.
Always a pleasure, Larry. Take care.
You bet. Let's get back and we'll take a look at what some of these markets are doing here right now. We were back there talking about cocoa. There was the 382. We'll get rid of that here. And we want to see the status of the thing. The thing that I'm watching the most here, folks, believe it or not, happens to be this chart. Hold on, right here. Where is it? Where is it? Where it is? Here's. No. Yeah, this is the one I'm watching right here. This is the Dow Jones, and then also the Russell and the NASDAQ. And NASDAQ has already completed the number. Now we're a long way from completing it here in the S&P. We've taken out the high of last of April. Okay, because this was March. Took out the high of April here on the 23rd. Now this is what's happened, folks. This is the Dow Jones. Remember, that's only 30 stocks. Basically, it's only about 15, the triple-digit ones. See, this pattern right here has completed in the NASDAQ, the Russell, and almost the S&P. So this is lagging the market. So if you're getting ready to sell something, sell this one because it's weaker than the rest. I know it doesn't look like it is, but if you look at that, you'll see that particular pattern. Remember the pattern that I brought to your attention just a little while ago. I just want to get this up here. This one right here. You see the NASDAQ one, how it's completed? Now, this is the same time frame, Well, we're sitting right at the 61% retracement of the high right there. There it is. We're right there. So we're spot on. There's your drive 1, drive 2, drive 3, A, B, C, D, A, B, C, D. This is the trade for me. Anyway, that's what we're paying attention to here, folks. So let's keep a close eye on it. See what happens with these markets as we come in the next day. I've got a little bit of time left, 32 seconds. Remember, our guest on Monday will be Norm Winsky, and hopefully Wednesday or Thursday we'll have Stan Harley in the air. And then we're also going to have Shane Smolian at the end of the week, and also Mike Moore. So we've got a full week next week. May 7th is going to be something pretty exciting, I think, as Jeff just mentioned. We'll be right back, folks. 877-927-6648.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, we're back, and I just wanted to alert you to the fact that we're going to have a very extensive newsletter coming up here this weekend, because there's so many patterns that are in just about all the markets, of course. The other one that is very, very important is the fact that we will have Norm Winsky as our guest on Monday. We will have Tuesday, I believe, is Mark Moore. Wednesday should be Shane Smolian. Thursday should be Stan Harley. So hopefully we'll get these guests all lined up, and it'll be an exciting group of people that we're following as we go through some of these things here and looking at it each day. Also, remember to do something nice for your neighbors. Because not everybody's in the good steads like you are, so you want to be able to be sure to do that. Now we are starting to rally back up. We're near the highs now in the S&P. We're not very far away. We're getting very close to that 5185 level. And as I mentioned before, we've already made that level in the cash index now. We've made it in the cash index. We made it in the NASDAQ. We made it in the Russell. And the only one we haven't completed is the Dow Jones. And that one comes in a whole lot higher, like a tune of about 400 points higher. So keep in mind today's high, today's close on all these markets is going to be very, very exciting for sure, no matter however you want to take a look at it. Anyway, those are the main things. We still have a downward bias to the gold, but it's debating a little bit. We had a high last week of 248. We got down to 290 and change, and I believe we've got a chance here to have a little bit more of a correction, possibly all the way down to maybe even the 2100 level, which is nothing more than a 382 retracement of that last big move, folks. So it's not that we're bearish on gold or silver, that's for sure. So those are what we're looking at today, folks. Live every day in an attitude of gratitude, and may God bless.